So looking at all emerging markets, I mean, we are ourselves still very bullish on China. I mean, China this year is a stable ship in all matters, both in terms of the economic developments and, of course, related to politics. We're seeing some reforms, but a bit less than usually. We're also very bullish on Russia. Russia is today the cheapest emerging market in the world, and it's a country which is doing good things in terms of their, the central bank is doing the right things. We're seeing, there is a lot of margin to cut rates, and of course the economy is actually recovering, and despite the sanctions.
On to China, Karine. How do you approach the mainland Chinese equities markets, which are opening up, albeit slowly? And how concerned are you about the credit profile there, the risk of default, etc.? And, of course, the response from Beijing has been increased credit tightening. Is that a risk, or can you absorb that and continue to look towards the consumption-led story there?
Yeah. So East Capital has been investing in A shares, the domestic onshore equity markets of China, already for several years. And we really are interested in this market that give investors exposure to very interesting companies and sectors that you don't find in other places, and which is also extremely decorrelated to the rest of the world, which is interesting. But specifically to your point, I think all investors, including ourselves at East Capital, when you are long-term, you are actually welcoming whatever China is doing related to the debt mountains. So we're seeing financial tightening, we're seeing a curb on credit risk, and that's very important and that's very good. Of course, it might imply, short-term pain, and that's maybe why the Asia market this year is underperforming. But for the long term, it's extremely important and something that I think all investors welcome.